episode of the Divorce and Separation Coach podcast is on a thought-provoking topic. While many of us start yawning when we think of discussing the state of the economy, it does have a very concrete impact on our lives. Today, I'm joined by Antonia Felix to explore how economic downturn impacts divorce in particular. Antonia is a partner in the family team at Mishcon de Reya. We specialize in all aspects of family law, including complex financial remedy cases, cohabitation disputes, and children's legal matters. Antonia works with her clients to minimize the impact of the cost of living crisis on changing family dynamics, and she helps them adopt a flexible and commercial approach in these uncertain times. Antonia is passionate about making her clients feel supported through the process, and she believes in signposting them to the right experts, be it co-parenting specialists, divorce consultants or coaches, therapists or mediators, as that helps them to achieve the best possible outcomes for themselves and their families. That's fascinating, Antonia. Thank you so much for joining us today.
Thank you for having me.
So this relationship between the state of the economy and personal decision-making is a very interesting topic. In your experience, what impact does economic downturn have on people's decision to get divorced at all or to wait for more auspicious times?
So I think the answer to that is that it's different depending on the wealth of your family. So obviously some people are going to be impacted more than others. But generally, the state of the economy does impact everyone, but just in different ways. And I think, particularly if it's been like it has been with us in the last sort of year and also COVID, it's been around, the knowledge of it's been around so long, it's been sort of seeping into everyone's minds. And I think has impacted more people than they realise, so that when they come to make big decisions, even if they aren't traditionally interested in the economy in that way, it does actually make them stop and think more. And I think particularly this month, January, lots of people say that it's a very popular month to get divorced or to start proceedings, because it's New Year's resolutions and they want to get going for the year. And I think at the moment that it will particularly make people stop and think before they progress anything.
Yeah. But what other alternatives do people resort to when the economy is not favorable? And what are the pros and cons of those?
So I think that what people do is they take more time over their decisions and possibly and hopefully talk more together as a couple, and have that time to sort of explore what might work and try to work together to kind of maximize the financial situation. But obviously that's not going to happen in all cases. And so I think there's a difference between being that kind of discretionary divorce where you've realised together that your marriage or your relationship isn't working and that actually it'd be best for you both and the family to divorce. It might be that you could put that on hold and look at other options. But if you're someone who you have to get out of your marriage, there might be domestic abuse, it might be that you literally cannot stay in this relationship any longer, then obviously the state of the economy is just going to not be as relevant because you've just got to do it. But I think if you are someone who is going to hold off, you would look at other options, such as it's not new, but it's a relatively new concept that people are now talking about, is nesting. So as a couple, you would decide, well, you find an alternative property, and it might be that you that the other property that you move in between is a family friend or a family member, but essentially one of you stays in the house with the children, and then the other one moves. You basically swap in and out of the house, but the children stay stable in the house. But obviously you've got to be able to afford another property for that person to live in. And obviously you can choose a very small sort of bedsit locally, but you've still got to pay rent, which is why people try to use friends or families. But that can be a bit tricky because you don't know how long it's going to last for. You've got the sort of you've got that issue of how much rent you need to pay or how long you're going to be borrowing it from someone. So the children ultimately benefit from that because their lives aren't disrupted, and that's why people like doing it. Although the slight downside to that is inevitably the property, well, not inevitably, but very often the property will have to be sold. So the children aren't necessarily coming to terms with the reality, and you're making them think that things will stay the same when they won't. And some children do better with that, because really, if your children are young, they love routine and structure, but even when they're older, they still like their own room and their things. So generally they prefer that, but obviously it's disruptive for the parents. And depending on what size of the house that you live in, you might actually be using the same bedroom, so you change the sheets on the bed, but that doesn't always fit well with people, particularly if someone has a new partner, for example. So it seems like a good option, and it is for some people, but for other people it actually creates more issues, and actually more issues in the relationship, because they moan and groan about things that, you know, perhaps one party isn't keeping the house tidy and the other one is, and all those kind of things. So it has to be explored in terms of what's right for you. And also, if you're trying to get out of a relationship quite quickly, that's actually prolonging and actually making you have to speak more than you would if you separated completely. So there's lots of things to think about, and every option has to be thought through and will suit some couples more than others.
It really is about understanding exactly how it will work in practice, and not having any illusions about the amount of separation there will be, and how you're going to still continue to interact.
Exactly.
Sharing.
Exactly. And I think, you know, as with everything, when these things happen, people, friends sort of say, oh, we did it and it worked really well. Or, you know, I know someone and it worked really well. And I think that can put pressure on people if it doesn't work for them. So I think you've got to focus on what's right for your family, and not worry too much about what works for other people, because there's no one size fits all in any of the scenarios.
And the age of the kids will also have a big impact, right? I'm sure that's part of
Of
considerations.
course. And actually, if you're a parent, you know, your biggest fear in a divorce is always going to be what the children need to make sure they're okay. And actually, in my experience, children are actually far more resilient than you think, provided you're honest with them. And actually, really, the issue for the children is the conflict between you, as opposed to the relationship breakdown or the divorce. I mean, that's always going to be obviously something they've got to come to terms with, but the conflict is the issue. So if nesting, for example, is going to create more conflict, then actually it's not better for the children. So, you know, and that's where you need to have some honest conversations. And if you can't speak between you, maybe look at speaking to a child specialist or a therapist who can help you with that.
Yeah, agreed. So nesting is definitely an option.
Exactly.
Are there any other elements that you recommend people build into the divorce settlements that you notice come up, particularly when there's an economic drought and other couples work through those constraints?
So it's again to do with the house. Is the main thing is often one party will actually rent somewhere, and it will be a decent property that the children, if you've got them, can move between, and they will commit to renting for, let's say, a year, and then they say they won't sell the house during that period, and then once that year is up, they will then review what the housing market's like and agree a price to put the house on the market at. Or they delay it even longer, and it might be that it coincides with a child going to secondary school or a child leaving school, or as particularly at the moment, which is obviously a huge issue, is mortgage rates. So if you're on a fixed rate, and you were lucky enough to fix a 5-year rate before last year, then at the moment people are saying, well, let's keep the property if we can't port the mortgage, and obviously every mortgage is different, until that rate runs out, because it's affordable. And frankly, if they built the house now and split it and bought 2 properties, those mortgages just wouldn't be affordable. So I think the answer is 2 there. They tried to keep the property for longer, but they have to have the income to be able to pay for rent for an extra property. And a lot of people don't, which is why they then stay in the house and often live separately within the house. Again, with nesting, works for some really well, depending on the size of the property. For other people, it's not tenable. So really then they think about moving out, but then it has to be what's affordable, and it's keeping the property for a bit longer. I mean, as I said at the beginning, for some people, a recession or an economic downturn is actually helpful, because, you know, for some people it suits them having the property at a slightly lower value, because well, you would hope that if you're staying within the same area, that you would also get a less expensive house in the same area if you were moving, because all property prices are being affected. But obviously, again, that's quite sort of individual to different cases, because if you're moving from one area in London where there has been a downfall, but you're going to an area like, for example, the Cotswolds, where there hasn't been such a reduction in house prices, then actually, you know, that's not necessarily going to be cost effective. So you have to look at what your plans are. But I think for some people, it suits them having a lower value for them, because it might be they can say, oh, look, the house is only worth X, so I can keep it because it doesn't exceed my housing needs. So there's arguments for and against it, but I think generally people choose not to sell their property immediately if there is an economic return.
Yeah, and I guess there's also the question of the interest rates with regards to mortgaging, right? So it's not just the value of the property, is whether you can afford to get a new mortgage on your own.
Exactly. And you know, the news this week means there might be a bit of light at the end of the tunnel for some people, but who knows? So, you know, if mortgage rates are slightly coming down this year and you're remortgaging, then that actually might be a good time to say, let's sell it anyway. Or it might be a good time for one party to say, look, they're coming down, so actually it is affordable for me to stay in this house until the kids are a bit older. And, you know, again, if you're a family with 2 properties or a property abroad, there's various ways you can do it. It might be that you sell your other assets to keep the main house, or you look at what the easiest asset is to sell with the less tax, for example, or that is the easiest to value, or because, you know, in an economic downturn, not everything has a reduction in value, or if it does, it might suit you at the time.
That's exactly the kind of solutioning and brainstorming that I do with my clients and trying to formulate other options. If they're very emotionally attached to the house, what else can you work with to try and
Exactly.
you know, guarantee that you can stay in that house?
And I think that's what I would say is key, is it's working with everyone on your team, whoever that is. And if you can work with your ex-partner, then even better. But obviously not everyone can. But it's just thinking to yourself, what are my long-term goals? And how, you know, what are my short-term goals? And what are the conflicts there, if any? But also, how can we work together to try to make this so that we're maximizing the assets for the whole family? And also, you know, people don't like doing this, but generally if you're getting divorced, both of you have to compromise on something. So I always say to people, what are your, you know, red lines, but what are you prepared to compromise on? And some people don't mind the house being sold, or, you know, they're prepared to think about it. And others, particularly mothers, are very much focused on the house. And I think sometimes people need a bit of guidance to look beyond that, because actually it's a short-term view, which we completely understand. But actually 3 years down the line, you might not want to be rattling around the family home, and you might actually want to have a bit more disposable income for other stuff, which could be more fun stuff like a holiday, or, you know, or buying something smaller and having a bit more flexibility. So I think in a downturn, in a way, it's an opportunity to take stock and actually think about things, but not to rush decisions, because it's so important you understand the values of everything and how they're going to be impacted.
Yeah, and you see sometimes some creative arrangements where the wife will stay in the house, but she'll rent it from her ex for a few years until the children are grown up, and then she'll move out. Those kind of things. So it really is a case by case conversation. Is there anything with regards to child maintenance or spousal maintenance that you would want people to make sure they document when they're making their arrangements?
Yeah, exactly. Well, that reminds me also, the other thing people tend to do in an economic downturn is again, the first, you know, they don't want to spend money on professional fees. So they panic about getting divorced, and they sometimes decide between them, we'll do it ourselves, so we don't pay legal fees, which is completely understandable. But often then what happens is that not many people have final orders made, so their final agreement isn't reflected in a final order. So although they know what their agreement is, they haven't approved and sealed by the court, which means that later on, if one of them doesn't abide by the terms, they can't enforce it. But it also means that they haven't dismissed each other's claims. And whilst it's very rare that someone comes back 20 years later and says, we didn't deal with our claims, it's possible, whilst they're still there, that someone could come back. But I think it just means that there's not so much finality about it. And so it's one of the things that people don't do. And I would urge everyone to try to get it into a court order, even if you reach an agreement yourself, getting some help to have that put in the agreement so you're clear. Because there's, as part of any settlement, you look at what child maintenance is payable and whether spousal maintenance, which lawyers call periodical payments, are payable. And child maintenance is always going to be payable if you've got children under the age of 18. And but both spousal and child maintenance, for the whole term that they're payable, can be varied upwards or downwards. And so that's one of the things that people do in an economic downturn is you might not have the capital, but for example, if you've got a good job, you might have more income. So you might be able to give the other party a bit more maintenance for the shorter period. Or it might be the other way, that you're worried about losing your job, you have lost your job, or you've had a pay cut, or you've been put part-time, and therefore you've got less money to go to the other party every month. So it can affect in different ways, but that's why you want to be very clear. Well, you want to understand that actually you may well agree, let's say £1,000 a month from one party to the other, but that either of you can apply to vary that amount. And with child maintenance, if your income goes up, then you're going to be paying a bit more child maintenance, and if it goes down, the same goes for that. So it's having an understanding of that, but also documenting it properly so that you've got the ability to vary it if you need to, because that is actually one of the only things that you've got in your armor, as it were, in an economic downturn, is if you did lose your job, and you were being paid maintenance from your ex-husband or wife, then you could apply, if your circumstances have materially changed, for a little bit of extra maintenance to help you along for a short period of time.
Yeah. Yeah, and it's surprising actually the number of people who don't plan for that yearly change of maintenance. They agree on an amount and they can document that, but they don't think of the long term. And I have people coming to me, maybe 5 years after being divorced, and there's been tremendous inflation here in the UK, and the amounts they had agreed on 5 years ago are just completely pretty now.
Exactly, and that's why I'd say so. Yes, so maintenance, almost certainly, child maintenance and spousal maintenance will increase in line with either CPI or RPI. And again, if you haven't documented your agreement or you haven't taken legal advice, you might not have put that in the agreement, and then there's not very much you can do. It has happened that very few applications that you make for variation, you can ask the court at that time to put the payments in line with inflation, but you've got to make an application to the court, and you're not always going to be successful. But then once you've got your maintenance increasing in line with RPI or CPI, you've got to make sure that on an annual basis you're actually doing the calculation, because you don't have a lawyer at that time, and the party who's going to be increasing the payments isn't necessarily going to be incentivized to say to you, oh, well, you £800 more a year or whatever it is. So it's remembering and setting your calendar to check, because particularly at the moment, there are going to be some increases which make a real difference to your monthly income.
Great. Is there anything else that you think couples should be particularly careful of in terms of future-proofing themselves in an economic downturn?
Yes, so I suppose the other big asset that people tend to have or worry about is a pension. And you've obviously got your private, if you have a workplace pension and you signed up to it at any stage in your career, you've got your private pension, and then you've obviously also got your entitlement to a state pension. And a lot of people don't actually even know where their pensions are if they've moved around jobs. And I think, so number one, you need to make sure you actually know what you've got. But number two, and it's something I feel very passionate about, and it's not necessarily linked to economic downturn, but just divorce generally, is that women particularly tend to have a lower pension than men. And although I'm generalising, the reality is women are more likely to have worked part-time at some point during their career, either to look after children or parents, for example, and also tend to prioritise other things over pensions, so have made less contributions over the years. So often, if you have a couple who are a man and a woman, you have one party who's got a bigger pension than the other. And I think in an economic downturn, your pension valuation is likely to be lower, which obviously suits the person with the bigger pension, because in reality, depending on what age they are, it is going to increase in value. But also it depending on what pension you've got, because you've obviously got lots of different ones. You can have final salary, which are rare now, but if your husband or wife is a doctor, for example, or who works for the NHS, or if they're slightly older, they may have one. And then you've got defined contribution and various other pensions that all have slightly different ways of being divided and valued. So I think people tend to do an economic downturn is if they're trying to sort of get it done, they might say, oh, well, I really want to keep the house, so you keep the pension, I'll keep the house, it's roughly the same, and off they go. But they haven't thought about the longer term implications, which is we're all living longer, hopefully, and women particularly have a longer life expectancy, and you need to understand not just the capital value of the pension, but the value it's going to have for you in terms of income later in life. And also, you know, people don't realise that you can draw down a tax-free lump sum from your pension, but also many pensions can actually be passed down to your children free of inheritance tax, whereas properties can as well, but they have different tax consequences. So it's really important that people understand that if they're not keeping half of the pension, they're actually giving away much more than they think. So I would say, number one, stop and think. And, you know, not everyone can afford to have a proper pension report, but to look at and speak to a financial advisor to work out what that pension might give you in retirement and what you need in retirement, which is different. And then look at whether the pension can be shared, which 9 times out of 10 it will be. And then looking at what's fair, because a pension is an asset in divorce which can be divided equally and should be from a marriage. So I think that's really important. And the other thing also, state pension, again, if you haven't worked for a period of time during your career, you might not actually have the ability to get a full state pension because you haven't made all your national insurance contributions. So often as part of a divorce settlement, you say to the other party, you need X amount to top you up so that you're then entitled to the full state pension.
Yeah. Yeah, so it's not just a matter of looking at the value of the house today, the value of the pension today.
No.
You have to really think long term.
Yeah, and you know, pensions are really complicated, and family lawyers don't traditionally love pensions, but there have been lots of reports with hundreds of pages, which I think just indicates how important and complicated it is, which is, again, another thing. And I do think an economic downturn, people completely understandably think, what have I got here and now? And they focus very much on the short term because they're panicking. And I think whereas pensions are a longer term asset, but just as important. So and as I say, women traditionally, and it is changing because there's a lot more education around it, don't see the value of the pension compared to, for example, the house. Whereas often, and again, I'm gender stereotyping, a man, if he's worked for longer, feels the pension is his actually, but also is a lot more, you know, they will keep the pension. And actually, that's not fair for them, but it's certainly not fair for the other person in the relationship. So that I would say certainly that needs to be looked at.
Yeah, and then there's the whole implications as well that you mentioned that need to be considered, which people don't always think of.
Yes, exactly. So there's actually a lot more to think about than people imagine. But you know, it's nothing is insurmountable. It's all totally doable. It's just, I think, when you're trying to make quick decisions or decisions that involve less people because you don't want to spend money on it, which again is completely understandable, some things like this can be missed, and then later down the line they regret it. And I just don't want that for anyone, because often it's the biggest or one of the biggest things will ever happen to you in your life. And so it really is important that you take the time to think about it.
And it might cost you a lot more than it would have to get the advice up front.
Well, exactly. And actually, often you're talking about getting substantially more by spending a very small amount, as you say. So it is worth it, although it doesn't at the time feel like something you should be spending your money on.
I agree. And so my last question is actually a question that I get asked by a lot of people, is, what can you do later on to amend your settlements based on the changes in the economy, and accommodate those changes?
So not very much, actually, which I think is upsetting and frustrating for people, because again, if they're not taking the right advice, they don't necessarily realize that. And I think, and we genuinely have people coming to us who say, oh, I made that decision, but I thought I could just come back when things changed. And you basically rarely can, actually. I mean, there's something which people may or may not have heard of called the Barder principle, which goes back to a case from 1987, which was quite extreme because it was about a wife tragically committing suicide but killing her children as well, a few weeks after the final order was made. And the husband in that case was given permission to set the order aside on the basis that the court felt that that event in itself fundamentally underlined the basis of the order that had previously been made. But it's extremely rare that those applications go through, because the court generally want there to be finality for everyone, and they want a final order to be a final order, because if everyone could come back you know, that could be costly, and there's not enough court time to deal with it. So I think people think that if they've been made redundant, for example, or there was a miscalculation of an asset at the time, that they can come back, but that is not classified as a barred event. So it would only be, which doesn't necessarily relate to the economic downturn, is if someone has committed fraud or there was material non-disclosure, those kind of things where you could come back. But even then, you have to show the court that had there been that information, a different order would have been made. So it's kind of like a few steps that you have to go through. It's not simple. So really the only thing that you can come back on is obviously the maintenance, so child and spousal maintenance. If you need more or to pay less, there is that option. To increase the term of payment. So if you've only been ordered to have, you're going to be paid for 5 years, you might ask the court to increase that, or to vary the amount. There's different ways you can do it, but otherwise there's very, very few options, unless of course between you can reach a side deal, and some people do, but so that's why, again, I would say it's so important to not rush into it and think, oh well, I'll just come back. And I mean, during COVID, for example, you know, businesses, the week before COVID, no one would have predicted that that was going to happen, and you had deals being made, and then businesses tanking, or businesses that were very valued very low, suddenly doing very well because of COVID. And even those cases, there hasn't been a change, because the fact is no one could have predicted it. But what it does do is, if you're negotiating now, it's very important, if there's a business involved and a property, but a business, whatever that business is, that you get it valued properly, but you ask the valuer, or you ask the questions of the other party, questions which relate to the longer term, because it might be that if a business is not doing very well now because it's got a lot of debt or because of business rates, etc., but that in 5 years' time, for example, it will be improving. It might be that you will be paid your share over a longer term in installments, or you've got the ability to share in the net proceeds of sale when the business is sold. So there's various ways you can do it which slightly protect you against the kind of financial backdrop that we're in at the moment. And that's why, again, it's important that if you've got a business in your asset structure, that you get a proper valuation and you have a proper understanding of what might happen. And of course, there's risks both ways. It might be that actually it's doing very well now, and then that it won't be. So sometimes people don't want anything to do with the business for that reason. But I think it all goes back to getting proper advice and looking into it now.
Great. And what about what, divorce isn't usually a very quick change. What about when there's changes to the economy during the course of the divorce? So something that's been agreed at the start suddenly needs to be revisited. Somebody couldn't afford to stay in the family house, but now they can, for example, because the mortgage rates have gone down. How can you address that?
So yeah, you're right. I mean, the divorce itself to actually not being married any longer can take sort of 7 to 9 months, because it's a process on the portal that you have to go through. So yeah, of course, during that period, circumstances could change. And if you haven't, so whilst you're going through the divorce process on the portal, you're obviously negotiating your finances, or you're in the court process. And if something changes, then of course you can change the settlement, because right up until you sign the agreement, you are under a duty to provide full financial disclosure to the other. And so even if let's say you own a business, and during the process an offer is made to buy the business at far more than you had thought, you have a duty to disclose that. And in fact, if you don't, then your agreement is at risk of being set aside later down the line, once it's discovered, because you haven't been truthful. But yes, so of course, if that's something like that happens, then there's always the ability to rejig the agreement if your circumstances have changed. But oddly, it doesn't actually happen that much, because I think most people, once they're in the process, people don't actually make huge decisions for that very reason. But yes, you can always, until it's actually a final order, you can tweak the agreement if you both agree. But once you've obviously got it open in writing and you're both accepting to that, if you're changing the terms, that obviously becomes much more difficult. But if there's been a material change in circumstances, then it would be harder for you to argue that you didn't want to change the terms.
Thank you so much, Antonia. All your tips and advice are really helpful, and I'm sure they'll help a lot of couples and individuals who are going through divorce. So thanks again for your time. It's been great to have that chat with you.
Thank you for having
Take
me.
care.